I made just over $25,000 trading this one stock. I'm going to show you how I did it right now. So let's come over to my chart. This is CCL. This is Carnival Cruise Line. Carnival Cruise Line has been a stock that has been battered and abused for years. And I'm going to explain to you what I mean by that. If you just come and look here at the long-term chart, and let's zoom way, way out. Okay, so we're going to look at over the last 5-6 years of this thing. So this big dip right here, this big fall from about $50 a share, if I remember correctly. Yep, it got as high in 2018 as about $75 a share, $72 a share. But the big focus is going to be right in here. This was COVID. So pre-COVID, everything is going okay. You could see that the stock was falling back down into this consolidation channel that was created from 2018. But COVID was didn't happen yet. All of a sudden, ships were shut down. What happened? Boom, the stock absolutely plummeted. I think it got as low as like $6 a share, if I'm not mistaken. I was lucky enough to buy down there, ended up selling around 27. That's not the point of this, but it's also kind of the point because I want to show you why I sold it 27, 29, 30, whatever the number was. So here is your high. This was your previous high when you were at this low. So and you can see here, if we just split the difference and draw a line straight across, and this is called your 50% rule, look at that. And why did I draw it right there? Well, coincidentally, I drew it at the peak in 2021, but look at all of this over the past 5 years. There's nothing up here, right? Meaning that the candles were not able to get back up. The price has not been able to get back up. Why is that important? Well, all of this is just negative or pushing down on the stock. So what is the 50% rule? Well, exactly what I drew. It's when you have a high and you have a low and you have 50% of the way. So what does this mean? Well, all of these people up here that were in the stock, let's say that you bought the stock at $52 a share. Let's say $50 a share just for the sake of argument right now or teaching. $50 a share falls down to $6. These people right here are saying, damn, I just lost about $45 a share. If I could just get half my money back, I'll be happy. So what happens? The stock rallies up a little bit. It gets almost to this kind of 50% area. And what happens? Everybody says, okay, I got 50% loss, better than 100% loss, better than 90% loss, falls right back down. Same thing again. Well, these people that didn't sell here, look what they did. They sold right here. And then we just waited and waited. And all of these people were saying, if I could just get half my money back. And look, they all got half their money back, and look what happened. And the stock has not gotten back to this 50% area for quite some time until 2024. It hit that 50%, but what has happened since? Well, it fell back down, and it's this trade that I'm going to show you. But the important thing to note here about the 50% rule is that it is very real. If you look at a stock like Boeing, let's just go and diverge over for a second to Boeing. Boeing, same thing. I played this the same way back in 2020, 2021. You had about $350 a share. You fell down to about 90, if I'm not mistaken. And then you had this room in the middle, right? Are you able to creep above the 50% area? Yeah, you did twice. But what happens each time? You fall right back below because the volume is not enough to drive you up back to those highs that it was previously at. So if we go back here to CCL, and I'm going to show you how I use this in my investment of CCL. So when this got so low, down here to about $6 a share, $7 a share, I bought a lot of it. And when we just come in here, I didn't sell here, I didn't sell here, I didn't sell here, but I ended up selling right here, actually, right there. It was in April. I remember I was actually walking in the park, and I remember getting a notification on my phone that it hit my price target, and my price target, I think it was $29.50 or $30 a share, and I ended up selling. Now, you're probably looking at this saying, well, if you sold here, you missed out on that right there. I did, but I noticed something. I noticed my high, my low, that 50% that was in the middle. And every time we hit it, we would fall back down. We would hit it, we would fall back down. We'd hit it, fall back down. I wasn't willing to take that risk again. I didn't think that we were going to get up back to 50. So I ended up exiting the stock. It turned out to be right. And that's the power of the 50% rule. This is how you can use these patterns when you're even investing. So let's get down to what the trade is. But I really wanted to explain 50% rule because this is something very important. So how did I make $25,000 on this trade? Well, I ended up buying in or shorting this as a short, of course, at 23.01. I knew that this was going to hit about $30 a share and it was going to start to fall back down. And then I said, okay, well, I'm going to go short on this. And this is that area that we can't break above. What's going to happen after it hits the ceiling? It's going to fall back down. When am I going to pick it up? Well, I looked here and said, all right, well, here's my base. Here's my base. So I want to get it below this yellow line. I ended up investing in the stock, going short right there when it dropped below. And look what happened the next few days. Nothing really happened. But what was it? Should I have sold because I was theoretically losing money? It was an unrealized loss. Well, no. Why? Look at the trend. The trend dropped into the sweet spot. So I was able to enter on an engulfing candlestick near the bottom of the candle when my trend just had entered the sweet spot. That's great. Consolidated for a few days and then boom. And look, I gave back half my gains, but I stayed in it. And my exit point on this goes back to, if you watched my previous video on Jets, if you watched the video before that, probably on SkyWest, if you watched the video before that on Lululemon, they were all under the same principle. It was what was going on with tariffs at the time. This drop, I don't think was from tariffs, if I remember correctly. This one was. This was all the fear in the market. And I said, there's probably going to be a 90-day pause somewhere in this market. And I thought it was going to be on a Friday, and it ended up being on a Wednesday, and that was this big run up here. So I actually exited my stock right in here. And I exited for a couple of reasons. One, the news of the tariffs. Two, look where we are here. We had this base, we had this consolidation, we had this peak that happened, and they were all at the same level. And if we just run this across, I kind of thought we were at that same, this was going to be a very strong level of support, okay? Now, not only that, but if you come down here, we are at the bottom of the stochastic. And if you're at the bottom of the stochastic, it doesn't mean just sell. That's not what it means. But when you start putting things together and you start going by experience that you have and patterns that you've seen before, it makes you say, yeah, maybe I should just take my profits on this thing or end up selling it. I ended up selling it. It turned out to be the right decision. Does this mean that I'm not going to get, back into it and let it go again? No, absolutely not. I would love to get back into CCL and short this thing more, because I do believe that CCL can come down here to about $14.50. I just need to see the pattern set up for it. So when you're looking at stocks, you need to zoom them out. This is the big key. Zoom your stock out and see, do you have a 50% rule going on? Do you have some crazy levels of support that it's probably going to get stuck at and probably not going to break through? Do you see some high that it's going to run into that steel I-beam and just start falling on you when it's coincidentally dropping into the sweet spot really nicely and having an engulfing candlestick? All of these put together give you the confidence to enter a trade. So I talk about 50% rule, but you've also heard me mention engulfing candlestick and trend. Those are the two most important things. In this video, it's probably 50% rule, but overall, it's the trend and the volume and the engulfing candlestick that is going to drive things. I have a PDF that I created for you guys. Very simple, very easy. You can print it out, put it on your desk. I encourage you to do this. It's in the link in the description below. Go grab it. It's free. There's no commitment to it in any capacity, but this is something that you can put right on your desk, right next to you, and just check it and go over it on a daily basis. All of this is about repetition. I would not have known about this 50% rule. I wouldn't have sold back in 2021. I wouldn't have entered my short today, a couple of weeks ago on CCL, had it not been for the repetition of seeing the 50% rule over and over, like I did with CCL, like I did with Boeing, like you've seen with so many different stocks out there. So all of this is just a piece of the puzzle. We can show example after example, but there's things that you need to see over and over and watch and study on a repetitive basis to become a really, really good trader for a long period of time. I made a video that it's about 2.5 hours long. It's chaptered. It has every single thing that you need to know about trading. You need to watch it next. It's right here. Go check it out.